Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday video is for Tuesday, September 18th, 2012. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. All right, guys, taking a look at the market, another quiet day on Wall Street. We've seen basically a slow fade off of the Federal Reserve Unlimited QE3 rally that we saw last Thursday and Friday morning. Interesting because considering they said unlimited, you have to ask yourself, if you're a bull, why is the market fading? And the second question you need to ask yourself is this a bullish consolidation pattern before another move up? And if not, what is that saying about what the market expects going forward? And this is my one little gripe with saying unlimited QE. And I think the Fed made a very big tactical error here. All right, why has the market rallied over the last 2-3 years? Why? Anyone? Anyone? Bueller? Basically because QE policy, right? There's always been another QE on the horizon that's been pushing the markets up. Even if you go to like 2-3 weeks ago, the market really wouldn't sell off because there was a new QE policy expected to be announced. Well, the Fed just came out and said, hey, we're going to announce unlimited now. We're doing unlimited. So let me ask you, now that you know the market's going to get unlimited QE, where's the next catalyst to upside? The Fed can't say, well, we're going to do QE4, QE5, QE6, because they're already doing unlimited QE. You see what I'm getting at? Essentially, that if the Fed had done QE3 and not said anything about unlimited, I think you would have had a rally, and then you could have had continuous moves up on expectations of QE4, 5, 6, 7, 8, 9, 10. That's just my personal analysis of the situation. I think the Fed, again, made a tactical error, and we may now be in for a little bit of trouble for the markets. Now, one thing you can go to here on the daily chart, if you look at your daily chart, you have a little bit of a topping tail from Friday. And since then, you have faded. So even though intraday you could make a case there's bullish consolidation, you also have to be aware that there's a topping tail, which is a bearish signal. So you have a bullish intraday over the last few days and a bearish daily. Now, which one's going to play out? I mean, that's the big question, right? And again, that's what I'm watching for. Now, I still think the markets are ridiculously inflated here. I don't think anyone would disagree with that. But the markets obviously haven't pulled back just yet. So we're going to see again how things trade out. But right now, the market's again pulling back a little bit today. They pulled back 50 cents on the spiders yesterday, another 30 cents today. Very minor pullbacks. We want to see if we get a bigger pullback in the coming days, which would be a little bit of a more catalyst to further downside and a failure of that bullish consolidation pattern. Looking at some other key factors here, I mean, that's just the intraday spiders. And again, you can see the volume is very, very light. Today and yesterday, in all fairness, were Jewish holidays too, so the volume is always a little bit lighter on those days. But, I mean, this is Options X. Tomorrow being Whipsaw Wednesday. It'd be interesting to see if we get a bigger move tomorrow one way or the other. Again, I would think that tomorrow will be a key day, either for a failure of the intraday bullish pattern or a success of it. So I'm looking at tomorrow as being a very, very pivotal day. By the way, Apple did finally breach $700 today, only trading about 50 cents above it. To me, it looks a little weak. All right? You know, it wasn't a blast through 700 that many people would expect. It basically got above, pulled back below, got above, pulled back below a little bit more, got back above. Right now it's trading at 700.25. So to me, it's a little bit of a tired move on Apple as well, and something we should monitor. All right, we'll keep an eye on that one. Okay. What else do we want to look at? JPM down 17 cents. Really not much doing there. You can see the same pattern on JPM. JPM is like a market leader here. So if you look at this chart right here, up move, that's your bull move, and then this can be considered inside action. So the question, again, as long as it holds the 200 intraday here, I think it's bullish. If it closes below here any point in the next day or two, that's going to be a failure, and you will see some major downside. So again, there are some interesting little things, especially on an intraday basis, that we need to watch here. A lot of charts continue to be very extended, although most of them are pulling back a little bit the last 2 days. Scanning through, we can take a look at Google. Google is trading actually higher today. Nice little move on Google. I still have an upside target on Google of about 725 to 730. I think it's going to head there. Once it gets there, I think at that point, Google may start to pull back. But I still think, again, considering as strong as it is today, in a slightly down market where the S&P is down about 3 points, Nasdaq's down 4, Dow is down about 5, Google's showing some great strength. I mean, there's no doubt about it. So I do expect it to go a little higher. I do not think it's a short right now whatsoever. Okay? If we look at the chart, the reason why I'm saying 725, 730, I would probably angle towards the 730 level. Go to your weekly chart, zoom out, and you can see in 2007 we basically traded in that range. So 730-ish, give or take. You even got as high as like 745. But I think 730 is where you start to accumulate a position in that range on the short side. Very extended chart at that point, especially if it continues up like that on Google. And you can see short term on the weekly. This is the weekly chart of Google, so a very, very explosive move to the upside. Other than that, let's take a look. Chevron, Exxon slightly lower. We talked about Apple slightly higher. Baidu is continuing to see a little pressure. BIDU has just been under pressure lately. You can see again the chart near the low end, even though it had a bounce a couple days ago last week. It has come back Monday and Tuesday on the daily chart right here. A little bit of a gap fill at 109.75. That would be a level that I think would get a bounce if we sold into that. Although right now, again, the volume in the market's so light, it's hard to imagine we're going to see enough selling pressure to see that downside. All right, let me just scan through, see if there's anything else. Scanning through here. Research in motion up slightly on the day. Amazon's up slightly. Amazon, good reversal. I am watching Chevron. Chevron had a nice topping tail yesterday and reversed again today after a retrace. So I think that's a possible short as well on Chevron. Let's take a look at oil. Oil had a huge drop yesterday. Big drop on that yesterday, and you're seeing the USO actually down again today. It doesn't look like it'll confirm unless it really sells sharply again, but remember, confirmation is proprietary here, so just keep an eye on that. If you need to learn that, you need to join here in themoneystocks.com. By the way, we offer a free trial, so I mean, no one can say they never tried us. At least try us out. Come to us, learn the proprietary methods, profit with us. Profit really in any market. Assuming you read the charts right, you'll have a couple losers, but it's usually 8 winners to every 2 losers, and I don't think there's anyone batting better than that out there. So just a side note on that. Let me just scan through, see if there's anything else. Halliburton was a scalp today. There were some good scalps today. Good Halliburton action there. We scalped that in the intraday stock chat. WFR was a good scalp today as well. We scalped that. That was a beautiful setup. CLF had a good scalp. Even Apple going up to 700 was pretty much a no-brainer this morning when it was trading at 696. It was going to break 700. You know, it's just a matter of when, in my opinion. So there were some good scalps there. So profits to be had across the board. Let's take a look at the dollar, last but not least. UUP up 6 cents today. Very nice move. It's hammering into the 200. You need to get over that 200, and then I think the dollar could have some legs to the upside. All right, guys, come to InTheMoneyStocks.com. Take the 7-day free trial to the Research Center geared towards swing traders and investors. And if you're a day trader, the intraday stock chat is for you. Take care.